Hello and welcome to part 2 of Talking Dollars and Making Sense. We are going to go over the presentation of the Statement of Activities. So make sure that you have your workbook with you for this section and also your text. You want to turn to page 315 and we're going to use problem P8 to go through this. The first thing we want to talk about is how the statement is broken down. It's 3 parts: unrestricted, temporary, restricted, and permanently restricted. And we're going to go through each of those sections to get to our grand total at the end. You may notice that this is quite different from the way we prepared our income statement for the business accounting. So let's go ahead and start with the changes in unrestricted net assets. Now this section is going to have in it both revenues and gains, but it's also going to have all of the expenses, because recall that expenses are always unrestricted. So based on what we see here in the text, we want to begin with our revenues and gains, including those special items we talked about, for example, special events. This is the correct way to demonstrate it for you, so I wanted to demonstrate that here, where we have our special event being reported at gross of $75 million, and then we go ahead and subtract our direct costs of $25 million. You'll notice the $50 million is what we put over into the right column. That's just to help us see that we want to include that amount in our grand total. Next, we want to make sure that we put in all of the donated items, including materials, facilities, and services. All 3 of these are going to be reported at their fair market value. Finally, we have to calculate that ever elusive net assets released from restrictions. What we're looking for are any items that were temporarily restricted that now are released. So in order to find those, you want to flip the page and look at that top paragraph where it begins talking about what happens with some additional funds. We see that in addition to the unrestricted contributions of $335 million, there was $100 million of unrestricted pledges outstanding at the beginning of 2007 that were collected during the year. What that means was those were temporarily restricted and now they are released because we actually collected the funds. The next sentence indicates that all the expenses for research were financed from resources restricted for specific research projects. This is going to be our purpose requirement. So we're going to go back to the expenses and we're going to look at those things that relate to research, and we see that's $103.8 million. The next sentence indicates that $110 million of construction expenditures and equipment purchases were financed from resources restricted for those purposes. So again, they've let us know that there's $110 million that needs to be reclassed. So that's how you'll come up with the total net assets that were released from restrictions. Now that we've seen these items, we've looked only at revenues and gains. We have a subtotal of $788.1 million as the increase in non-restricted net assets. But as we saw above, we need to take a look at expenses. So now expenses are broken down to 2 types, and you have to know the difference between the 2. There's program services and then there's supporting services. Remember, program services relate to the mission of the organization, whereas supporting are those things that's just going to help them directly do the things the organization is trying to do. So let's take a look at our expenses here in the text and see if we can divvy those up. The first thing you see is education and research, both of which are programs. As you move down, you see management in general, fundraising, direct costs of special events, which we've already taken into consideration above, and then interest. Please remember that interest and fundraising and management in general, those are all overhead type items, so they're going to be considered supporting services. Once we total up those, we come to a grand total of $550 million of our total expense. Now recall, how do we get the net increase in unrestricted net assets? Well, we have to look at that increase that we calculated previously and subtract our total expenses. So what does that look like? We calculated 788.1 as our increase from the previous slide. We've just calculated that 550 million. We'll subtract that, which means our net increase, that is the difference between the two, is 238.1 million. Now it's time to move on to temporarily restricted. So we finished the unrestricted section. Now this temporarily restricted section, we'll also find those in the text labeled as restricted support and restricted revenues. Those are the ones that we're going to use for our temporarily restricted. So there they are listed. And then we see our net assets released from restrictions is coming back again, but this time it's a negative number. Just remember, when we're releasing them from the restrictions, they were originally temporarily restricted, and now they are not. So as a result, we need to subtract the exact same amount we added to the unrestricted net assets previously in this section. Next, we need to calculate the permanently restricted net asset changes because we have finished the unrestricted and the temporarily restricted. And we'll look in the text and we see the three items listed here as permanently restricted, and we need to make sure we've allocated those three and summed them. So as you can see here, the grand total of the permanently restricted is 66.9 million. So we would just go ahead and add up all three of the categories. Recall unrestricted, temporarily restricted, and permanently restricted. When we do that, that gets us our grand total increase in net assets. Finally, we need to get to that net assets beginning number. Looking back at the text, you'll notice the last three lines here. It gives us what our beginning balances were by indicating January 1st, 2000 x 7. We add all three of those together as you see listed here, and that will get us our net assets for January 1st. The final step then is to calculate what is our net assets at the end of the year. Well, we'll do that pretty simply. We'll figure out what our beginning balance was. We'll add to it any additional items we've received, and that's going to tell us what our ending balance is. Hopefully, you were able to follow along with how this statement of activities should appear, and you are ready to try it now on your own. Thank you.